No heckling from the crowd at very, very early. Good morning, everyone, and happy Valentine's Day. Some of you are looking a bit grumpy. Why? So loud? Well, take your hearing aids out like me and you'll be okay. It's okay. And no grumpiness from you at home either. Hello, everyone, and welcome. For those of you who I haven't had the great pleasure of meeting, my name is Christina Morrissey, and I am your master, mistress, whatever you would like to use as a terminology, of ceremonies for the next 2 days. So by the end of today, we will have shown to you 72 potentials for your investment portfolios. And today being Valentine's Day, if your wish was for the first thing that you saw today to be grade, thickness and exceptional upside, you've come to the right place. Nicholas Rutherford, would you like to come and join us? We are going future battery minerals for our very first presentation. Please make Nicholas very welcome, everyone.
Well, thank you for that warm introduction, and if you weren't already awake, I think that presentation before definitely woke me up, so thank you very much for that. And thank you all for being here so early in the morning. The early bird definitely does get the worm today. Through this presentation, I just wanted to cover off on a few things. More importantly, everything in this presentation is publicly available information. It is found on our website. This presentation is also available on the ASX platform today. And in reference to all our announcements we'll be talking through, they're just on the right-hand side there, as you can go through them as well at home. To talk about FBM, who we really are, we're a battery minerals company with two key assets that we've already discovered, and we're methodically going through a systematic drill program, proving up them as resources. But for today, the major asset and our flagship I'll be speaking to is our Kangaroo Hills lithium project. As introduced, that's a high-grade, thick lithium-bearing pegmatite in the strategic goldfields area. To talk about the history of the company, it actually was formerly a nickel exploration company with a number of nickel assets, 3 of which had mineral resources. Late in 2022, the company was doing nickel-targeted drilling in the northern part of their Kangaroo Hills project, which is in the south, their Nepean nickel project. Drilling these targets, they actually intercepted some pegmatites that were grading 1.3, 1.4%. And very quickly, and credit to the team in pivoting and looking at what that potential was, rapidly did exploration on the ground, and by March had already come out with assays proving up what is the discovery of Kangaroo Hills with 29 metres at 1.36% from 38 metres. But really the management team and the company more broadly is focused on is rapidly developing and working the ground that we have quite methodically and through our experience in lithium proving up what we see as quite tangible assets moving forward. Concurrently with that, we actually acquired the Nevada Lithium project, and same again, found that the region was prospective, undertook a drilling program and made the discovery there. And really where we are today is looking at the year ahead is we've got 2 mineral resources on 2 high-grade prospective lithium projects in 2 tier 1 jurisdictions. To talk about the company corporately, again, there's our share price at around about 5.5 cents today. Market capitalisation circa $30 million. We have $3 million in the bank, but also when we last year we actually sold down a P and nickel asset for $10 million cash spread across 4 milestone payments. First one of which we received late last year, second one we received in May, and the next 2 to come 6 months thereafter. Really what that does is takes us off from raising capital for the project primarily, and particularly helps us fund all our exploration on our projects for the year ahead. Composition of the share registry. Look, we do have a large shareholding, or a portion of it, with board and management that was acquired more recently. We have a number of strategic investors, but in particular Hancock came on our share registry last year and again have been very supportive of our journey, proving up our project, primarily Kangaroo Hills, for this year. Funnily enough, with all lithium companies, have gone through the highs and the lows, and myself been through the cycles before. We really are kind of coming to the lows, and you'll see on the share price, it's actually down at the same point as we were before discovering the lithium project. So it's quite an interesting time for investors to be looking back at lithium. Behind every company, you really have to look at the people who are running it and how you're trusting them with your money. With our board and management team, it's really encompassing experience in the goldfields, experience in resources, not only exploration but also development, and again, particularly experience in lithium. To start with our chairman, Mike Edwards, he's again 25 years experience as a geologist by training and economist, sits on a number of successful gold exploration companies, and you would have seen more recently one of his companies, Greenstone, a proposed merger with Horizon Minerals. So very experienced chairman in the ASX space. Myself and my background, I'm purely lithium, so I've been in the lithium industry for a number of years, since 2018. Worked on 5 lithium projects, 2 of which are now in production, and 2 that are at resource stage, and very excited for Kangaroo Hills to be the next one. To talk about the technical director, Robin Cox, he's actually the gentleman who discovered both assets, but has made quite a number of other discoveries in uranium and gold and nickel. So Robin's a great, part of the team, a critical part of the team, and has been with the company for 4 years, so really led the transition of the company to where it is today. More recently, with probably late November, with myself joining in October, we were lucky enough to attract Nev Powell, a very experienced director and executive, primarily for his knowledge and history of leading Fortescue as CEO, with his 8-year tenure there, tripling the production of Fortescue and really building it to what it is. So kudos to securing Nev, and he's been a critical part for us again as we transition through exploration and in the years ahead through to development. And Sylvia Morton, an experienced CFO and COSEC. So across the board, a very tight team. It's not a large company with a lot of employees. We're quite a tight run team, and again, accountability across the board. To touch on Kangaroo Hills, it is 100% owned. We acquired the balance, the 20% of the project last year, and that's our corporate who sits on our register. We gave them script and us, called Lodestar Resources, a small gold company. And really where we are, we're situated in one of the best areas you could be for a project, not only for lithium, but in general. 17 k's south of Coolgardie, sealed road to site, within a stone's throw distance to other lithium resources, but 2 operating assets. But the access to infrastructure is really critical, particularly when you're looking to develop a project. So not only having the value in the ground, but getting it out of the ground. And really for us, and what we see and we take credit from and take comfort in, is we really have a high grade, near surface, shallow dipping pegmatite. And I'll touch on a bit further, but we've uncovered more in the area, and something that we're really looking to do in a methodical, sort of systematic approach over the year ahead. To talk about the discovery itself, you can see there on the left-hand side, we do have consistent hits of high-grade intercepts and thickness on the big red. That's the darker red outline, and continuation there. But importantly, what we did do is we actually drilled to the southern end of that tenure and that bit that discovered another lithium-bearing pegmatite that actually dips under big red. But you can see on the right-hand side, those drill holes are really in the centerpiece there with the call out of those drill results. We really only scratched the surface of the tenure that we have. And for the year ahead is our plan, particularly to go north in what is the most prospective area as we continue to sort of chase big red along its strike there. But if you look on the left-hand side, the main thing to call out there, besides the outcropping in the pink, you'll see scattered across the tenure, is also those big blue sort of formations, and that's actually our resistivity targets. And resistivity, the testing of the non-magnetic material on our tenure, has been a really good predictor for where these pegmatites have been. And that's been supported as we only did this survey in December and then went back and checked our drill results, and it's mimicked exactly where, you know, the mineralization and the pegmatites have been. So as you can see in the northern part, something that we've really only scratched the surface of what this project has to offer. To give you a bit of a visualization of the two pegmatites and how they track, you can see big red, you know, continues to extend to the north, but actually both of them do, Rocky and big red, and that's what gives us a lot of confidence around potentially a bigger system and a bit of a feeder system as we go north. And the important thing to call out there is that big red, you can see, is very shallow dipping. So it's at an angle about 30 degrees that we know so far. And what that really gives us confidence in is how amenable it is to open pit mining. Something that you know, puts us, when we get to that point in the study phase, at the lower end of the cost curve, at the lower the strip ratio. But what Rocky does is it ties together another I guess, system. It proves there's a stack system occurring, particularly as we go north, and it really does add a bit of size to what the scale of the project can be due to its proximity to Big Red. As I touched on, the most prospective area that we have is our northern tenure, and that's really what we've looked to target and really maximise the value in, geologically speaking, for the year ahead in a systematic approach. First, stepping out, you know, what we see and what we know at Big Red. That's what we're very focused on, of continuing that particular pegmatite. But in terms of all our northern targets, which are Western Grey, Big Red North, Big Red West, Whiptail and Quokka, they all have exceptional prospectivity as well due to historical drilling that we've got confirmed that there's mineralisation in them, but also rock chips and surfeit outcropping. So as we say, targets, there can be quite a big spread of what determines a target, but for us, we've sort of confirmed these all as very drill-ready targets for the year ahead. It'd be remiss of me as a project developer in the lithium space to not talk about metallurgy. You can have a lot of tons, but if you can't extract it and sell it, it does become quite challenging. And really what we did as a business is late last year undertake a metallurgical program, and we've just got those results earlier this month that confirm one, spodumene dominant mineralisation, circa 90%. But more importantly, we undertook a raft of metallurgical pathways that proved that we can use conventional methods, being DMS and froth flotation, to economically recover the lithium and the spodumene out of that area. So really, the year ahead and what we're doing is, once we've done all the geological testing of our targets, trying to maximise the size of the project, at the back end, really look to undertake another metallurgical project, look at variability and see how we can start to wrap our head around the economics and move into a study phase with the project. But the important there is the amenability of DMS, which comes at a great advantage due to economic benchmarks and measures, being operational cost reduction, capital cost reduction, but also the use of water and other non-financial metrics that really make your project more attractive. Quickly, just to touch on Nevada, again, it's an 80% owned project. We're really situated in quite an interesting area where we're the last one to come up with a resource. So 3 of our peers that all are contiguous to us all have mineral resources already, and in particular, American Lithium and ABTC have already entered the study phase and development phase of their projects. So the main reason for Nevada that we saw is it's a mining-friendly state and jurisdiction, but more importantly, there's downstream investment in the province, and also the peers in the area who have already done the hard yards of proving that these processes can work and now moving them into development. The IRA really sort of backs that up. Obviously, questions of how that looks moving forward, but some of our peers have already received tens of millions of dollars of funding for their projects that are just slightly more advanced than us. So it does open up a whole other opportunity there to advance projects with non-diluted capital that can help progress this asset moving forward. Talking about the geology, and what we've discovered there is we've uncovered and we've proven that we've hit the thicknesses and the size of intercepts that are comparable or better than our local peers, but also the grade, which is quite critical in lithium claystones or sediments. But more importantly, we've really found that it's a near surface part of the area. So if we go back to the map, we know that our peers to the east do have resources, although they're much deeper, and we're finding that we're sort of the one slightly higher grade, but more importantly, near surface part of that basin that makes it quite attractive. And if you look on the right-hand side on the diagram there, you'll see the bottom section, the Lone Mountain. There's a few highlighted green holes there. That's really what we're currently doing the drilling on and waiting on results imminently on there to finish off the drilling for the resource. But what we're seeing in that basin is that as we continue to head south in the Lone Mountain, it does come up surface, and we've already seen the seabed formation at surface. So again, a really highly attractive and high value part of our ground, but also the basin. So maiden mineral resource coming out before the end of this quarter. And they're just a bit of a comparison to our peers, particularly ABTC and American Lithium. You know, it is a proven area. They're going through development, and really we're sort of riding on the coattails of them at this stage. Thank you for the closeout. To sort of cover off on the company investment highlights, yeah, we've got 2 exciting new lithium discoveries, in particular Kangaroo Hills. For the year ahead, we've got a systematic drill program looking not only extend Big Red that we already know is mineralised and looks very, very attractive, but also to test our northern targets to grow the size of that project. With a maiden mineral resource target at end of this year, and Nevada mineral resource coming out this year. So a few catalysts for the company moving forward. That's all. Thank you so much.
Nicholas, I got so close and yet so far away. Nicholas Rathdon opening us up for Valentine's Day, and Mark Cossom's joining us now. And he's had a bit of a rough year over at Gateway in the last 12 months, but they've had 2 new discoveries in the last 3 months. And obviously he's got a Valentine's Day smile on and lots to share with us. Would you please make him very welcome, everyone?
Thanks, Chrissy, and thanks to the organisers, Vertical Events, for getting Gateway to come and present again, and thanks for everyone turning up and online, listen to the story. And yeah, it's been a bit of excitement at Gateway the last couple of months in particular, after what was a tough few years for junior gold explorers, and things are really starting to look up. The usual disclaimer and the like, which can be read on our website. So with Gateway, I mean, we consider it really pretty much an unparalleled value proposition at the moment. Like I said, with the way that things have gone the last couple of years with junior gold explorer valuations, you know, Gateway's an explorer with great land package in a fantastic part of WA, which really is a tier 1 jurisdiction for gold exploration in the world. About 500,000 ounces, just over 500,000 ounces of resources, which, look at our current market capitalisation, you know, leaves things at about $10 in enterprise value per ounce. So just to put that in perspective, some of the recent sort of junior asset sort of transactions, Kin and Strickland and the like in the last 6 to 9 months, looking at $80 to $90 a resource ounce. So that just gives you an indication of where things have got to and the value that can be had. But not only that, and this is probably the most important thing for me and most pleasing thing, is that the last just over 12 months, we had a definite change in strategy, in that we knew we had to look for step change discoveries in the project to really take it forward, to get beyond this 500,000 ounce threshold and get up into something that really makes it a project of significance. And we stuck to our guns through last year in what was a tough time for explorers, And with this exploration focus and generating new targets, and we're really starting to see the fruits of that in the last few months. A couple of new discoveries, some pretty exciting drilling going on at the moment. And really, as far as where we are and what the company is, 2024 is going to be fantastic. And to do that, we've got the team, the management, and also the shareholders behind us to really make sure we propel Gateway forward. Bit of a quick corporate summary. The important takeaways there, I suppose, our biggest shareholder, Kerry Hermanis, has been with the company for a long time. He's stuck with us and backed us, and we really appreciate his backing. And not only that, all our top 20 have been there for a long time, particularly the last sort of 6 years when the company was reset. And they've always helped us, through good times and bad, which is really appreciated. Directors there got a fair stake in the game. And if we look at the capital structure, still fairly tight for an explorer the size that we are, and really leaves us leverage to upside. I mentioned the team. I won't go through everyone's sort of credentials there, but really what I can say is that within that group, we've got a background in technical, not only exploration and discovery, but growing companies, running feasibility studies, operating mines, and really creating value for shareholders. So where are we? Well, Gateway's just north of Sandstone in the Murchison region of WA, historic goldfield of WA. It's a pretty unconsolidated area in terms of the majority of the resources in this area are controlled by juniors like ourselves. Out to the west of us, a lot of the ground's been consolidated with Westgold and Ramelius and the like. Out to the east, same sort of story with Goldfields and Bellevue. This part of WA, for various reasons, is still in the hands of a lot of juniors, and the opposite upside for that from a corporate point of view. But not only that, it gives us a real foothold, and it enables us to get hold of a pretty undervalued asset and take it forward. I mentioned our focus the last 12 months. We went back and really looking for step change discoveries, pulled the project apart, and looking for making these things that are going to create real value for the company and its shareholders, and we're starting to see the fruits of that now. So last year we began this project-wide study. We went back to sort of bare basics, if you like, pulled apart the geology, got some structural experts in, started reinterpreting things, and not only that, and what turned out to be a pretty key move for us was we did a 2D seismic survey over part of the project, which really helped us pull things together and gave us a couple of different interpretations that now we are starting to see the benefits of, and it's led to new discoveries in the last few months. In January, we announced the new duplex discovery, which sits in not far from our existing resources, but in a new rock type and a new deposit style, and this Flame Tree magmatic copper nickel PGE target, which is really exciting and something that we're drilling right now. So we've got duplex down there, and then we've got Flame Tree not far away. So duplex, this was an area we identified south of our existing resources, different rock type to what hosts most of the resources historically in the area, which were up to the north were subjected to open pit mining in the early 90s by Herald Resources and a couple of other deposits around there, but this sits in a gabbro further to the south. We looked at this rock type and knew that it was pretty prospective elsewhere in WA, and not only that, immediately next door to us in Horizons ground. We sort of persisted there with what we thought was a good place to be, and we did some RC drilling in December last year, following up a couple of phases of air core drilling, and we can see the best intersection there of 18 metres at 5 grams per tonne at 100 metres. Fantastic result for us and sort of vindicating that strategy. And we've just finished last week a follow-up RC program out there at Duplex, which results will be coming in the next sort of 3 to 4 weeks. We can just look in section what that looks like. Pretty standard Eastern Goldfields gold discovery, and hopefully a lot more to come. So Flame Tree copper nickel target. This really was a byproduct of this reinterpretation of the geology of the belt. Some work that was done by Gateway out there in 2013, targeting a bit of a VMS target. A lot of near surface copper was intersected, never really explained. There was one interesting intersection in the database, that hole 283, which wasn't really a VMS style intersection. It had copper, it had nickel, platinum, palladium, cobalt, so real typical magmatic signature. It was in massive sulfides in a really obscure ultramafic that was logged, and everyone just thought it was a bit of a logging anomaly and wasn't really true. We went back and the seismic helped us turn the geology on its head, if you like. We had another look at the chips. It was definitely ultramafic. In December, we went and drilled an RC hole out there back the other way to scissor it to confirm this new interpretation on the geology, which which come up good. And not only that, we intersected some sulfides ourselves in that RC hole, only thin ones, but up around the percent copper, 0.4% nickel, again with the PGEs and cobalt, so confirming that magmatic signature. The hole actually ended in 1 metre at 1% copper, we really took a lot of encouragement out of that. But separate to that whole process, there was an EM survey conducted back in the day, a fixed loop survey. We reprocessed that independent of our own work and come up again with this east dipping interpretation at depth, and that's a fairly strong EM conductor down there, 12,500 Siemens. It's a discrete anomaly. It doesn't look to be stratigraphic. So right now we're drilling a diamond hole into this target as we speak, and that's a pretty exciting thing for us. Bit of a step away from our gold exploration. We're still focused on gold, but this was such a compelling target that we couldn't walk away from it. This led us to have another look at what has been targeted historically in the area from a similar point of view, particularly in the late 70s, early 80s. A lot of existing targets that haven't been followed up to the north at the Montague Range intrusion. We can see there some of the near surface results that have come from this historic exploration. So really, there's a lot of exciting targets of a similar ilk to follow up on the project, and really, we're pretty excited by what could be and the type of value that we could create for Gateway shareholders. On a bigger picture, we can see there the seismic there that and how that led to this reinterpretation. Really, we got the dome itself and all the geology folded underneath it. This sort of flipped everything on its head from traditionally how we've been looking at things, and we went back and had a look at a lot of our old data, and it really did. Initially, we thought it was a bit of an anomaly of geophysics, and sometimes you take it with a grain of salt, but this is turning out to be closer to the truth, and it's really opening up a lot of areas for us to go back and make new discoveries in this project. Again, still doing this grassroots exploration. We can see this is up the north end of the tenement, an area undercover, hasn't traditionally been explored. The tenure was only granted last year. First pass soil sampling survey over there, a nice 2 and a bit kilometre long anomaly with basically no drilling into it. This is a whole new area we'll get into, and a couple of other areas we're completing first pass soil sampling over. Just sort of highlighting the fact that this, yes, we got 500,000 ounces. Yes, the ground had some historic mining in the early 90s, but there's a lot of work to do here and a lot of discoveries to be made, and we're really excited by this potential. So I guess one of the other sort of little side things we got into last year was we did a bit of a strata titled JV with Sensor, who have recently relisted as a lithium specific explorer. They have come in, they're exploring a few of our tenements for lithium, not something that we had any expertise in and wanted to divert into, but it's something that we saw there, opportunity through Sensor to add some value, and they're up there doing that independent of our work and free carrying us. So in summary, we're a dedicated explorer in a great part of WA and a great part of the world. We've got 500,000 ounces already and a pretty cheap valuation when you look at things, but we've been focused on these step change discoveries, and what we're really doing is making them. There's a lot of exciting work underway as we speak and a lot of exciting results to come. So thanks for your time and thanks for listening, and I've got the booth out in the foyer there if anyone wants to catch up. Thank you. Thanks, Chrissy.
I'm getting very, very close to people today. George Sakalidis, would you like to come and join us up on stage, sir? Now, there's been a bit of chatter about magnetic resources of late in a couple of the resources reporters. So I'm interested to hear what it is that you've got that's getting them interested. Would you please make George very welcome, everyone?
Yeah, thank you. Yeah, it's great to be here again, and be giving you a bit of an update. There's plenty going on in magnetic. Yeah, so we talked at one of the conferences down south, and we put out our resource statement. We've got 1.2 million ounces at 1.7 grams, but within that, the main deposit, which is called Lady Julie North 4, is 852,000 ounces, but at 2 grams per tonne, which is an exceptional grade for an open cut. We own our land 100%, and we're within trucking distance of 3 separate mills, and we're actually due to put out a pre-feasibility results, and as you can imagine, the results will be very, very good. Market cap's 240 million. We've had a reasonable share performance this year. Pretty tightly held stock. About top 4 owned 45%, the top 20 owned 71%. And Laverton is about 300 kilometres north of Kalgoorlie. Discovery-wise, Hawksnest 9 was the first one. Then we discovered Lady Julie Central. Last but not least is Lady Julie North 4, which was discovered around 2021. Serious amount of drilling. So this is a development story. There's about 150,000 metres of drilling completed. Okay, so location-wise, we actually stay at Laverton. We're 15 kilometres to the south. We're next door to some of the big deposits, Wallaby and Sunrise Dam, but those mills are very close. And this is another map showing those mills. 2 of the mills are less than half capacity, and we're within 10, 15 k's of those 2 mills. So there's an opportunity to do deals, and a lot of these companies are in our data room if you're not aware. Okay, so 8 and 9, it's only 2 k's from Lady Julie Central, and Lady Julie North 4 is a further 2 k's away. Lady Julie North 4 sits on the Chatterbox Shear, which is a major structure, and Lady Julie North 4 is the main thing we're talking about today. The resource that we put out in November, there was a 107% increase from the February resource, and Lady Julie went up by 300% from 200 to 850. So significant increases, and we expect the same moving on. HU9 is a surface deposit, and that's what led me to keep drilling. Then we discovered Lady Julie Central, and that deposit has some remarkable high-grade intersections from surface, and most likely will be the starter pit. But the third one, Lady Julie North 4, has 30 metres of transported overburden over the top, but nevertheless the intersections have been significant, and as we go deeper they seem to get better and better, and this is the one that's most of the market is becoming excited about. Okay, so this is a plan. It's about 700 metres long. It's increasing in each direction. There's an upper and lower hanging wall. And there's 2 cross sections that we'll see, and you can see some of the intersections are pretty good. 30 metres at 5.5 grams, 21 at 5.4. We stepped out by 60 metres, and we've encountered a 40-metre intersection of the breccia silica pyrite alteration. Most of the time that's well mineralised, and we are continuing drilling in that area to scope out how big this is. The second cross section is one that we published previously, and it had our best intersection of 133 metres to 2.9, and you can see we've already completed a deeper drill hole. We're waiting for those results. All the drilling we're doing to date are diamond drilling because of the depth that we're going to. Now the next cross section was truly a big step out, and you can see the actual resource is in the top 250 metres in there. We stepped out downwards 200 metres below it, and we intersected 16 at 4.5 grams, and that's good underground grade. Nevertheless, it pointed to this down dip extent of 550 metres, which is really pretty amazing, and we obviously haven't closed that off. It appears to be open, well, it will be open because we haven't drilled down that deep, but it does give you the big potential size of the system. I mean, look, previously we estimated every 100 metres that we go downwards, the resource will increase by approximately 100 to 150,000 ounces. But obviously we need to do the drilling, but it looks pretty exciting. Okay, so this is an interesting map in that we made a comparison between ourselves and many other companies with production or near production as an open pit. And our Lady Julie North 4 is number 1 on the list, averaging 2 grams per tonne. Even if we included Lady Julie with H&9 and Lady Julie Central, the average would be 1.9, so it's still higher than the rest. So that'll give you a bit of an understanding that this pre-feasibility result that we're putting out will be pretty exceptional based on that graph alone. Look, we presented this previously, and it's something that I think most, gold companies should put out. It's a grade thickness map. It's a long section of the footwall, which is, in this case, the main mineralised zone, but does give you an understanding of what you're dealing with. And from our point of view, it's allowed us to step out. The hole 33, which had the 16 at 4.5 grams, is way below, down here. Nevertheless, using this sort of information and structural interp allowed us to put that deeper hole down. So it's a good way of representing what you have. Okay, look, I've shown this before, but there are some big deposits. Wallaby, Sunrise Dam, they are stacked downwards. We currently have about 3 stacks, but we haven't drilled deep enough. These deposits go down to a couple of kilometres extent. We note that Sunrise Dam have these breccia zones, which are shown as yellow dashes, and they make their way close to surface. You can see them making their way close to surface. We think that's in some ways similar to what we're finding, because we have some very thick breccia zones. And this is what they look like, and you can see the angular nature of the glass and the silica pyrite. As we go north in our deposit, we actually get bleached, altered ultramafics as well. So all the rock types are strongly altered. This gravity map shows you the extent of the Chatterbox shear, and note that it starts from Beasley Creek, which is mined out, Apollo, which has been mined out, our Lady Julie North 4, and all the way down to Wallaby, which is a 7 million ounce deposit. This is a major structural feature. It's a mineralised feature, and you can actually see it in seismic as well. You can see this structure here, and that actually is the Chatterbox shear, which Lady Julie North 4 sits on. The extent of that structure is about 1.5 k's, and we've only drilled down about 550 metres so far. The information so far points to that structure being mineralised as well at depth, and that's part of the upside of what we have. Okay, in the background, we've done all these studies as part of the pre-feasibility and also for our mining lease proposals. We've started the negotiations on native title. Metallurgy so far has been fantastic. So everything is good. So hopefully we can get these, put the pre-fees out, continue our drilling and get ready for production. So in summary, we've done pretty well, and we're going to continue our drilling. At the same time, pre-feasibility will show how good it is, and we'll see where we all end up. Thanks very much.
Thank you, George. All right, who knows what a qualification scale micronizer is, or where you'd find one? Our next presenter does, and it makes him very, very happy. It's making a lot of people in Western Australia very, very happy. Would you please welcome from International Graphite, Andrew Worland. Welcome, sir. Thanks,
Chrissy. Thanks, everyone, for showing up bright and early this Wednesday morning, and welcome everyone online. Yeah, fantastic news for us in International Graphite this week. We announced the commissioning of our first production unit down in Collie, so I'm looking forward to describing that for you. I will be making some forward statements and economic forecasts in this presentation, so please note the disclosure there. So International Graphite's developing 2 world-class assets here in Western Australia. We're uniquely Western Australian focused for the graphite industry. You'll be very rare for anybody to find a company that's developing a mine and downstream facilities in the one jurisdiction. And we're leading the way in that. Our Springdale Graphite project in the south coast of Western Australia and our planned battery anode facilities in Collie. As I said, we've installed our first production unit in Collie, and we opened that this week. And we hosted a significant contingent of government agencies on Monday to thank them for their role in building, helping build our facility. There's a $1.5 million mechanising facility there in the light industrial area of Collie, which was being now wet commissioned on imported graphite concentrates. We are producing samples for product customer acceptance and sales, and we anticipate generating sales agreements for our mechanised product later this year, and that'll underwrite the expansion of that facility to a 4,000 tonne per annum mechanising facility. Mechanising graphite has a broad range of applications in battery, energy storage, and industrial uses, including thermal management, lubricants, engineered products, polymers, and battery cathodes. We'll be selling it to both Australian and international customers. The average price we'll be receiving it's quite broad, between $1,800 and $8,500 a tonne, depending on purity and other specifications, at a reasonably low operating cost relative to those prices. So it's a very exciting development for us. The significance of this for International Graphite is that it gets us into the marketplace for graphite well ahead of when one might get into it when fully integrating the mine to market operations that I'm about to tell you about. It'll establish a brand and as I said, a cash flow for us and be a real point of difference for International Graphite. We released a scoping study 3 or 4 weeks ago in respect to what we're describing as the integrated mine to market strategy for the Springdale Graphite Project and Collie downstream processing. Close up of Springdale on the south coast of Western Australia, just near Hopeton. We're on cleared agricultural farmland. We've got magnificent relationships with all the farm owners down there, in particular 3 that our operations most affect. We are 25 kilometres from Ravensthorpe nickel mine and just south of the Mount Catlin lithium mine. So it's an area that's well and truly used to dealing with both mining operations and agriculture in the one region. Well supported by infrastructure, an airport, 1,600 metre commercial airstrip just to the north of our properties. We won Explorer of the Year last year for the work that we did on our mineral resource. We inherited 15.5 million tonnes at just over 6% from Comet Resources back in April 2022, which is the foundation of our listing. We've expanded that now to 49.3 million tonnes at 6.5% for 3.2 million tonnes of contained graphite. That's at a 2% cutoff. At 5% graphite cutoff, you're looking at 28 million tonnes at 8.7% TGC for 2.4 million tonnes of contained metal. That's a significant inventory in the graphite industry. So we've got more than enough graphite there under reporting at this point in time to advance through to full feasibility. But there is significant exploration potential on the properties. We've only explored somewhere in the region of 10% of our tenement areas. And all of that area to the north of the yellow yoke that you can see on that image is graphite anomalies from aeromagnetic surveys that are yet to be tested. So there's areas of land on our tenements that are at least as big as the existing mineral resource that are yet to be tested. So I think we can very safely say that we've got decades of mining operations ahead of us down at Springdale. The scoping study that we released last week, or a couple of weeks ago, I should say, considered a 500,000 tonne per annum processing facility, a conventional open pit mine, just on day shift only from a mining perspective. You can see there on the left-hand side the drawdown of indicated resource. We've only modelled the first 15 years, of which 72% of the ore that was processed came from the indicated category. As I said, once we go and drill further, we'll upgrade that. We know we have some 37 years of mine scheduling just on the existing mineral resource. The average grade of the ore that we mined over that 15-year period was just 9.5% TGC. Straightforward graphite concentrator that's practiced all around the world, nothing unique about that particular equipment, no long lead items in there. So once we make a final investment decision for Springdale, we're looking at a 12-month construction period which includes the ordering, manufacturing of equipment and delivery and installation. What we're doing here is trying to capture the full value of the resource. The significance of that micronising facility that I referred to earlier is that it's the first process step in downstream processing for graphite, and it's also results in when we go to the next stage, which is ferritising, it results in micronised byproducts being a part of the process as you move along towards battery anode material. Now, what we're doing down at Collie at the moment is essentially establishing our market for that byproduct for when we get Springdale in operation. So not only is it providing us really important cash flow for a development stage company, it's also providing us with a significant brand, a customer base that will allow us seamlessly to move into larger volumes when Springdale comes online. The next step is the process of purification, which is taking a graphite concentrate from 95% to 99.95%, which is your battery grade material. And from there you go to a coated, which is your final formulation for battery anode. We've established downstream processing R&D facilities in Collie. Again, one of the first companies that's done that globally to establish micronising and spheritizing capability. We have a thermal purification unit down there at Collie. We've produced samples both from imported concentrates, and we are producing samples from the Springdale drill core at the moment, which is showing that our sizing and distributions are meeting market expectations for spheritized graphite. The lithium-ion battery industry is driving all this battery mineral demand, as you're, I'm sure, well aware. I just wanted to show this graph for two reasons. One is graphite's the single most important element by commodity in a lithium-ion battery. Roughly speaking, 1 kilowatt of hour requires 1 kilogram of graphite. And the other thing I wanted to point out is that we hear a lot about the lithium-ion battery, electric vehicle sales quarter by quarter, and how it can sometimes move up and down and doesn't necessarily meet expectations. The important thing on this graph is that back in 2021, the electric vehicle forecast sales for 2023 was going to be 14 million units. And that's a figure from the International Energy Association. They actually hit, according to Reuters, 13.6 million vehicle sales in 2023. So clearly the trajectory is consistent with forecasts. And so I'd urge everybody, when they're considering the electric vehicle market, to think about the macro theme and not get too caught up in month on month and quarter by quarter movements. This is a scoping study, integrated financial results, significant earnings potential for our fully integrated facilities. The results were published in detail in our release 3 or 4 weeks ago, so I'll refer you to those. The capital cost for the concentrator at Springdale, $76 million, and then for uncoated material, another $124 million. Those numbers are consistent with estimates we put out back in 2023 as well. Next steps in 2024, down at Springdale, infill drilling, hydrogeotech permitting. We expect to wrap up the DFS by the end of this year for Springdale. With an ounce of luck, we'll have permitting completed as well, but that may roll over into early next year. Similarly, for downstream processing, we'll complete all of the feasibility work during the course of this year, looking to bring in equity partners and offtake during the course of this year to underwrite the funding of the business going forward. I think we represent excellent corporate value. I'll just $26 million, please do some research and peer compare us to some of our peers, and I think you'll see some excellent value opportunities. So just to finish in the highlights, we're producing micronised graphite in Collie. We are on the path to being a graphite producer, developing a world-class mine at Springdale in the best location to develop mining assets and infrastructure assets in the world. Chris is all over me, so I'll leave it at that. Thanks everyone for listening.
I'm going to get one of them soon. Camera, coming up and join us. We're going to Ontario in Canada now, and we're going to go on a tour of a vertically integrated lithium business that's making, it's causing a lot of interest for a lot of people, notably a fellow who you may know of called Joe Lowry, who is very fond of the management team that these guys have put together. Would you please make Cameron very welcome?
Thanks, Chrissy, and thanks everyone for attending this great conference once again. We've only got about 10 minutes, so I'll try and flick through as quickly as I can, but I think similar to Andrew's last discussion there, we are in the battery minerals thematic, and certainly in the moment everyone's sort of looking around at the month-by-month characteristics, but certainly it's a medium to long-term prospect for all of us. Look, at the moment we've been sort of oversold, I think, in the lithium industry with a lot of our other peers as well. So the one huge thing on this slide is our strategic management and also strategic shareholders on the register. So we've got some really strong interest on our register and some really large strategic groups, which obviously is a good sentiment for the company. The board of directors, myself and Pat Murphy sit on the board, but also chaired by John Young, who is our non-executive chairman and founder of Pilbara Minerals. Rob Longley, who's also around today, he was one of the existing directors from the company we acquired the assets from up in Ontario. Why lithium? We're still at the beginning of this EV thematic. I think similar to Andrew's just point there, the forecasts on EV uptake have actually been very similar with a lot of analysts and a lot of sentiment. But as you can see here, I mean, I think Pilbara Minerals put up a similar graph to this the other day. So we are still at the beginning of this transition, energy transition. So one of the biggest differences between us and a lot of the companies that are presenting today as well, though, is we are in Canada. And Canada is a completely different backdrop to Western Australia as far as how much investment is being spent up there. And all the OEMs and chemical manufacturers are really creating a complete supply chain in Ontario. 28 billion or 25 billion, 28 billion, whichever figure you sort of look at, is currently under construction. And that's a complete supply chain up there in Ontario. And green technology is right on the doorstep to be able to provide lithium concentrates and in the future lithium chemicals into that industry. There is a huge amount of government support, like billions of dollars of incentives and opportunities that are being pushed into the northwestern Ontario sector to ensure that mines can complete the whole mine-to-market EV supply chain all the way through to EVs being produced in Ontario. So what is our strategy? We've got a three-stage integrated strategy. Our absolute first call is to be the first producer in Ontario. We are planning to be in production in 2025, 2026, and currently we are on track to still achieve that. The second part of our strategy is to establish, along with strategic partners and larger operators, a chemical conversion facility. That is what Ontario is needing and what the government is also waiting to be deployed into the area. And they are looking to establish and support at least one, maybe even two chemical conversion facilities with very large grants and debt facilities. And our third part of the strategy is to continue to grow our resources at our Western hub, which certainly looks like a game-changing project for green technology. As I said, this is the supply chain that's building out. We're on the left-hand side, so mines, concentration, conversion, and then on the right-hand side in Ontario is CAM manufacturing, battery cell manufacturing from some of the largest manufacturers in the world that are setting up there. And they're actually producing EVs. So, I mean, where they're producing EVs is less than 1,200 kilometres from where our assets are. So it's a completely different landscape to what we see here in Western Australia. We've just recently released a PEA just before Christmas. We have, I guess, combined the two mines that we have to extend the mine life. That will just continue to grow and the resource inventory will continue to grow as we drill them out. We did use a price that was probably a little bit higher than, well, significantly higher than what the current market pricing is, but certainly back in October, it was the current view. So you can sort of see in this lithium space, the price does swing there's some really large swings, troughs and peaks. But one thing we do know, and one thing I've been in this lithium industry for quite a few years now, is that it will be coming back. Don't ask me when, I haven't got the crystal ball, but there's one thing that is for certain. When it does come back, it will come back very strong as well. So we released the study. We've got some really strong economics. We're currently actually optimising that PEA, and we will actually be releasing that probably in the next few weeks as well with some more current pricing and some adjusted economics on costing. So this is the first project. It's our Eastern Hub, the Seymour Lithium project. We've got about 10.3 million tonnes at just over 1%. We do have an exploration target there of still above 20 million tonnes. We've got extremely coarse grain, fresh ore from surface, so it allows us to go to a DMS, two-stage DMS only. There have been some projects that have employed DMS only in Australia and haven't probably worked as well as some people thought, but look, certainly we're continuing to do a lot of our metallurgical test work, and the ore bodies up in Canada are fresh from surface. As I mentioned, they're not weathered in nature, so certainly competent rocks holds up in a DMS only situation. It's a zero discharge tailings site, so it's very environmentally friendly. We are moving forward to a DFS this year, and we are looking to a financial investment decision for the end of the year, along with receiving all our permits to basically develop the mine. And that will be the first lithium mine in Ontario that's been permitted. The DFS that we're working on now does actually look at some pit optimisations, and looks we will be using much lower costing and pit shells for the whittle optimisations, down to probably $1,000 a tonne. One thing that we're quite comfortable with is that we do have at least 6 years of mine life there. With the surrounding deposits, we think we'll be able to extend that, but it certainly is quite profitable from what we can see at the moment, and we will be studying that further. The ore body dips at sort of around about a 45-degree angle, so strip ratios probably are a little bit higher than we'd like, but certainly they still provide some good economics on the extraction and processing. Here's the resource growth that we're talking about. We've acquired some assets about 20 kilometres to the east. We've already had some really good success there in establishing what we think could be another sort of small to medium-sized deposit, which could extend the mine life by probably 2 to 3 or even 4 years. There are multiple other deposits and opportunities in the area as well. So it is going to be a bit of a district or a camp or whatever you want to call it in the area. We will be permitting the one processing plant, and there will be plenty of opportunities to increase that mine life. This is the conversion facility that we're looking at and studying. For a junior of our size, to be an integrated developer, I guess, is quite a large pill to swallow. But certainly we won't be doing this ourselves. We're talking to multiple large conglomerates and operators that actually produce lithium chemicals currently. And we will be looking at partnering with those types of companies in the future to not only study, but also to use their flow sheet and technical expertise, and obviously their balance sheet to help develop this conversion facility. There is a huge amount of interest. Ontario itself and to Western Ontario could provide 50 to 60 years or even 100 years of lithium supply chain material. So it certainly is a very, I think, well thought out supply chain from the government, and I guess them now pushing this into the mines in the northwest as well. So this is I think the game changer for green technology. Look, we've only been drilling here for 12 months. It was a very small, modest resource when we first started. We've now established up to just under 15 million tonnes here at Root. Specifically, the Root Bay project itself is really exciting. We've just discovered Root Bay East, which has a lot more opportunity to grow the resource to the east. Here it is here. We've got further underground extension potential to be tested, definitely continues at depth and still holds its grade. So we think that Root Bay could be, quite a large resource itself, and we will be updating the market, I think, in the coming weeks on a larger exploration target. And certainly on, I guess, our thoughts geologically of what this may contain. But this does look to be like a 15 to 20 year mine life, and it certainly will be become and underpin a lot of the feed to the chemical conversion facility that we will be looking at in Thunder Bay. So what's next for us this year? It is going to be a very exciting year. We are optimising, I think, our spend, and so we'll be holding drilling until the second half of the year. But we're continuing with basically the DFS work. We've completed all the drilling for Seymour, so there isn't another large spend to complete that drilling for the DFS. We'll continue our financing structuring. We'll continue our permitting activities and ensure that we are progressing towards FID towards the end of the year. Conversion facility, we'll be finalising our partnering process, and then towards the end of the year, we'll be continuing to drill at our Western hub, which is the Root facility. One thing that certainly does stick out, I think, in the lithium market as well, is once the heat does come back into it, we are pretty sure that the money will flow to the nearer term producers, and certainly with Green Technology Metals, we will be the next near-term producer in Ontario, well, the first producer in Ontario, and probably the next one in Canada as well. So, have I made the right time, Chrissy? I've still got 10 seconds left.
Go, keep going.
Use it.
I've run out of slides. I thought I was pretty good there.
You're pretty good, Cameron. Well done. I'll give you the high five.
Oh, high five. Thanks, Chris.
Yeah, well done. Would you thank
Thanks, everyone.
And that's why Joe Lowry likes them. They say they're going to do something, they stick to their parameters. Well done. And I love Johnny Young. I'm always disappointed when it's not the real Johnny Young, but nevertheless. All right, we're going to introduce you to the largest free milling gold project in Western Australia. as Dr. Matthew Greentree gets all his bits and pieces underway in there. So it's a really interesting project. There's been a lot of news about it lately. They're based out in Katanning, and I think that Dr. Greentree will be very excited at the moment because you're this close now, aren't you? This close. Would you please make him welcome, everyone?
All right, thanks for the introduction there, and thank you for coming to the presentation today. Look, we've been working on this for quite some time, and over the past 18 months or so, we've really advanced the project, both in terms of the technical de-risking of that project, with a large resource upgrade in September last year to over 3 million ounces. We've advanced the feasibility studies, and we plan to have DFS results out mid-year. But alongside that, the important things is really acquisition of some of the freehold land that the project sits on, engagement with the community, and these other permitting requirements are incredibly important to see this project come to light. So what I'll do is take you through the project, and there's also a 3D component, so we can actually have a look at the ore body and see really what it looks like under the ground. This presentation is up on our website, so I won't go through the disclaimer, but I will take you through where the company's sitting today. We've just got under 3 million in cash, and we're working through a feasibility study. There's a few things going on in terms of the board as well, so we'll expect to have some announcement out, some changes to the composition of that as well. So we're filling out that board as we're taking the company closer to development and production. So as a snapshot for the company, it's a large resource base of over 3 million ounces, and we have a very strong view on the potential growth of that scale as well, both in the main resource areas and the main project area, but also regionally. We've got over 5,500 square kilometres of tenure in a greenstone belt that really hasn't received much attention in terms of exploration over the years. We have a large reserve base, over 1 million ounces. That gives us a 10-year life of mine. We'd expect to see that reserve increase with the new feasibility studies coming out. Rapid payback, and part of that is really to do with the geometry of the ore body. We see the highest grades early on in the life of mine, and that really gives us a shot in the arm to get things moving and pay back that debt. And as I said, we've been de-risking the project, acquiring the freehold that the project sits on, really getting that permitting in place and taking this project forward. One of the things that I'll point out, this is a bargain at the moment. It's an incredibly large resource base. We're trading well under enterprise value over the resource ounces. So if you want to have a look at a gold stock today, and I think gold is a commodity that people want to have a look at in 2024, and I think Katanning and Ausgold is an absolute buy at the moment. So where are we? We're just 3.5 hours south of Perth, so it's really well located. Perth's up here, the Katanning Gold Project down here, and those tenements in gold are us. To the north of us is Anglo American. Out to the east there is FMG. We're sitting on a major crustal structure that separates two parts of the southwest terrain in the Yilgarn Craton. Incredibly fertile area. We've got some very large deposits there. We've got Julimar up in the north, Boddington, and Greenbushes there on that western side, and obviously the Katanning Gold Project, over 3 million ounces. So this dashboard really gives you a snapshot of what the project looks like and where the DFS are sort of heading at the moment, with the outcomes to be determined by mid-year. One of the important things is relatively low stripping ratio, 4:1. Strong annual production, and in the first 6 years we're seeing over 155,000 ounces, so it is a very large project, and I think really delivers very good outcomes in terms of the financials as well. Alongside that is that long life of mine, which I think is really important in making these investment decisions. We've been de-risking the technical side over the past 2 years or so. The project over its life has had nearly 300,000 metres of drilling across that main Katanning project. We added 17,000 metres to that main resource, and particularly the central zone, which I'll take you through shortly, really to upgrade the resource, particularly in the early parts of the production profile. And you can see the rapid increase in the resource over the last couple of years there. We've been able to do that at a fairly low cost as well. $11 per resource ounce, I think, is a pretty good investment. And that high proportion measured and indicated, I think, is also very good in terms of being able to debt fund this project. In terms of the production, this came through from our scoping study last year, but you can see that early on, some high grades deliver very high production in terms of ounces, and that continues on for the first 6 years. We also see that there's a view that there's potential exploration upside in the underground. I'll take you through where we see those geological upside within the project beyond the current resources as well. What I'd like to do now is just really take you to the project and have a look at it. We can see the old mining operation. Although it's a development project, there has been small-scale mining here before, and you can see that open pit there. To the south, this area here, which is an area we call Jinkers South, and that was really important in terms of the discovery of this project and the development, because it really opened up the potential scale to a much larger operation than envisaged before. This area here includes some of the freehold that we've purchased recently, and to the south is the Dingo area, which is what we call the southern zone, and we have a strong view on terms of the upside for this project through that southern zone. One of the other things that's really important about this project is the township. So the township of Katanning, it's over 4,000 people. We're currently working on workers' accommodation in the town, but it's an area that I think really is accepting of a new industry. And I think what we're proposing at Ausgold with the Katanning Gold Project will bring that to the region. So I'll take you through now the geology. It's a very large mineralised system. That gold anomaly, it's a golden soils anomaly, is over 17 kilometres long. So to put that into context, where we're sitting today in Fremantle is about 17 kilometres from the city of Perth. So that's the sort of scale we're talking about. Most of the focus of our activities in what we call the central zone in the middle here. And that's really the 90% of the current feasibility studies focused in that and the ore reserves. It sits on existing mining leases, but we're expanding that footprint to include the areas of infrastructure, including the tails dam and the processing facilities. And that's moving forward as we speak. You can see there the current resource base, very long strike length, with some potential to take this further underground as well. Those pits there that are shown there are part of the pre-feasibility study pits, and work is currently going on there as part of the DFS, and we'll see the results of those shortly. You can see there some of the high-grade intercepts here. Although it's a 1 gram ore body, there's some very high-grade material in and amongst that as well, and they form a chute-like geometry, and that's again quite important in terms of the development of the project, because these high-grade zones deliver a lot of value, particularly early on in what we call the Jinkers zone, which plunges to the north, and the Jinkers South zone here, which is that more eastern component, which again allows us to increase that scale. They remain open along strike and at depth, and you can see them here wrapping around a quartz monzonite or an internal granite body, and those high-grade zones there are really what the project's about and what delivers the value. We'll just step through some sections to just give you an idea of what the project and what the deposit looks like. Again, a lot of these areas here, will provide upside to the project into the future as well. Some very high-grade material. The Dingo zone, or the southern zone here, remains open. We're seeing a lot of expansion in that recent resource upgrade at Dingo to over 300,000 ounces, and this also adds to or will add to the DFS as we move through those studies. And you can see a lot of extension along strike there with that inferred material in the blue that came with that new resource upgrade in September. So some of the areas that are sitting outside the current studies are the Datatine prospect. Again, some very high-grade results there. It's more steeply plunging. It doesn't sit in our current studies, but it will form part of the DFS work. Although small at this stage, I think it's got a lot of potential and also provides, I guess, some exploration upside along that Datatine Stanley structure. You can see there in that photo, a large piece of gold. That's about a centimetre long piece of gold there. Some very high-grade intercepts there, and this is what we do see in this area along this Stanley Datatine fault here. These cross faults were found to be quite important in localising the gold mineralisation regionally, but also at the Katanning Gold Project. So as our understanding is evolving, we're really focusing on those areas. And this Stanley area, Stanley and Duggan areas I'll talk to, but they are fairly high priority, largely because they provide some very high grades. And you can see here some of the past intercepts at the Stanley project. We're putting that together with our land package outside that along a larger thrust zone. And we have a strong understanding of the geology now, and we've got state government EIS funding to help us drill some of those conceptual targets outside our main project area. Again, the Duggan project, there was a discovery by Ausgold, but you can see some very high-grade gold mineralisation there. When you start seeing these high grades, I think it's something you want to go back to and understand that more, because they don't occur in isolation, and we believe that the fertility of those structures is demonstrated by these results. We've also talked in the past a lot about the regional potential. It's not just for gold. This is a major greenstone belt. We've got 5,500 square kilometres of tenements. We've mapped 2,500 square kilometres of greenstone within that. And those greenstones are important for lithium and other metals as well. So we've undertook a large review of our tenement package and a targeting study. We've turned up a number of lithium targets, but also some rare earth targets amongst our gold targeting as well. So that work's going on in the background, and I think we'll start to see some interesting results coming forward over the next few months. So just to recap, it's 100% owned. It's the largest undeveloped open cut project in Western Australia. It's got a large resource base, large reserve base, DFS coming out mid-year. We've been working hard to de-risk the project, take that forward, and I think it should be an exciting time for Ausgold as we deliver those results. So thanks for your time. Come and talk to us at booth 85 if you've got any further questions. Thank you.
Thanks, Matthew. Next up, we've got from Red Metal Rutherford. This is an interesting discovery they've made up in Queensland. I'm interested to hear more about it because it's completely different, isn't it? Maybe it's definitely an Australian first, maybe a world first. And it does have the potential to rewrite that traditional rare earths cost curve. So please make him very welcome. From Red Metal, it's Rob Rutherford.
Thank you very much. That was very well summarised, so I won't even begin to go back into that. But yeah, we've made a pretty significant rare earth discovery around Mount Isa. We've done the breakthrough, the metallurgical work, which is a little bit of a breakthrough. It's showing us that we've got this potential for this low capex, low cost heap leach processing. So a little snapshot on Red Metal and who we are. For some of you who haven't met us before, we listed in 2003, so we've been going for about 20 years. We issued 80 million shares in 2003. We've only got 298 on issue now, 98.9 million. That's quite an achievement in itself, to be a junior and still have that many shares on issue. The reason we've been able to do that is we look for giant base metal deposits. That's our core business. And we've always had a lot of funding support from the majors. We've had strategic alliances with Phelps Dodge, the second largest copper producer in the world, which is now Freeport. And we've currently got an alliance with Oz Minerals, which is now BHP. So we've got some really wonderful targets in the base metal space. Come to our booth and we can show you some, but one of the ones at the moment that's quite appealing is this wonderful Havron and Winu lookalikes immediately along strike from that deposit. We've also, during those 20 years, we discovered the Maronan deposit, and that's being recently spun out into its own IPO. We have just over 50% of that asset, and it's getting spectacular lead silver results close to surface. It's one of the larger undeveloped silver lead resources in Australia. You get that Maronan, you get all the wonderful juicy base metal targets pretty much for free, chucked in as steak knives, if you like this rare earth discovery that I'm about to show you. You can see our share price has pretty well doubled since we put the announcement out last week. And I think people are just starting to wake up to what we've discovered here because it's so different from what everyone else is playing with. Our market cap's about 54 million. Meteoric, who've got a fairly interesting rare earth project that we think is comparable, has got a market cap of about 400 million. So get on board, there's still plenty of upside on this train. It's just leaving the station. So all that promotional stuff aside, we'll move along. Before I go diving into our project, there's probably a couple of things you need to know when you look at rare earth projects. It's all about mineralogy and it's all about host rock, which impacts on the metallurgy. There's two types of rare earth projects emerging in Australia at the moment and potentially the world. There's these complex high temperature processing routes which treat monazite and apatite. They get the monazite and apatite from making mineral concentrates from carbonatites and the byproducts of mineral sand mining. These have really high capex, over $1.5 billion or more. They use temperatures of over 800 degrees to treat the minerals, and they are also got radionuclide issues with thorium. At the other end of the spectrum, we've got what I call simple low temperature leachable deposits. These include clay-hosted ionic deposits, where the rare earths are just loosely bound to the clay mineral and somewhat easier extracted. You have clay-hosted non-ionic deposits. These are similar sorts of things, but the rare earths are tied up in the clays and not as easily to liberate and require a bit more acid. And then there's this Sabella discovery. This is a granite-hosted one, completely different from the clay ones. And all of these low temperature ones offer the potential for low capex and low OPEX operations. And they are probably going to be the future of rare earths as the demand increases. As everyone's probably told you, what we're looking for is magnetic minerals, magnet minerals, neodymium, praseodymium, dysprosium, terbium. That demand for those magnets, we all use them in our hybrid vehicles, our electric vehicles and wind turbines, and that's set to double in demand by 2031 on all the forecasts. Chinese supply a large proportion of it, but I won't really go into all that because there's a lot more expert people in that field, so we'll just stick with that. So the deposit, if you're going to mine a bulk tonnage low-grade system, you've got to have every box ticked. We've certainly got the infrastructure box ticked. We're only 20 k's from southwest of Mount Isa. It has excellent infrastructure options. We've got a city of 40,000 people, which are a mining town like Kalgoorlie. There's a power plant there that's run off gas. They've got a big smelter that creates acid and an acid plant. There's huge dams for water nearby, and we're only 20 k's away from it. So we've ticked the infrastructure box. So what's the deposit? A little bit about the deposit itself. It's hosted in a rare earth enriched granite. A granite is a low acid consuming rock, and that's the important point to note. The granite itself that hosts the mineralisation is an unusual phase within the Sabella batholith. It's 12 kilometres long, 3 kilometres wide, and it has a pretty consistent grade all the way through it. Importantly though, the bulk of the rare earths occur in a soluble fluorocarbonate mineral, bastnasite and sinchasite. So what we've really got here is a soluble ore mineral in a non-acid consuming granite rock. And that's a pretty simple model for rare mineral extraction. And there's plenty of examples around the world, the giant copper deposits, of which I used to work for Phelps Dodge. They've got soluble copper in a non-acid consuming granite host rock. They mine copper down to 0.1, 0.2%. They probably produce 800,000 tonnes of copper a year from those heap leach operations. They're tier one assets. And this is looking to be the equivalent of that, but in rare earths, we think. So we did some drilling, put these results out in August. The drilling reveals 2 high-grade rare earth zones, each about 1 kilometre wide, no strip on them. They've come straight to surface. And the grades are pretty much the same through the oxidation profile and into the fresh. We got about 20 metres of weathering. It's not the deep clay weathering like we see in Western Australia. It's just lightly oxidised and broken granite. These zones extend, we drilled a traverse to the north 4 kilometres. It's still up there. That's called the Donkey Dam Traverse. And then we've got these 2 wide zones. They're open to the north and south. But importantly, they're also open at depth. The leach characteristics that we're seeing in the oxidised weathered rock is identical to what we're seeing in the fresh. So these aren't blanket deposits like we often get in the clay seams, which are supergene enrichments. These are quite deep penetrating deposits. We've drilled it to 120 metres and we're still in the mineralisation. We've done some seismic refraction profile across that traverse just to see if we can map the weathering profile. And you can see here in blue, that's rippable rock. You can use the P-wave velocity profiles to work out how hard and how difficult it will be to mine. So we've got this wonderful soft layer to about 20 metres, which will have real mining and comminution advantages. But so we're happy to have a little bit of soft dig on top. This shows you the granite. You can see the fresh granite at the bottom. It's a coarse feldspar-rich thing. The transitional stuff, it's heavily fractured and easy. You can see it on the desk out in their office there. It'll probably crush itself. And the oxidised stuff is, again, even more fractured. So it's just really a fracture profile as you go up in the weathering. It's not really deep weathering like we see in these clay systems. We've done some leach tests, and these are the results we put out last week. These are intermittent bottle roll tests. They simulate a heap leach setting. We basically just leave it in a bottle, and every 5 minutes, every hour, we give it a little twist. So it doesn't do it, it's not an aggressive rolling test, but it simulates a heap leach. And so we saw really strong rare earth extractions with low levels of impurities. When we were using really low levels of sulfuric acid at ambient temperature. So this is a low temperature leach system. We're getting really high recoveries, and I'll just show you some of that. So a typical clay hosted system, some of the recoveries are sort of 50 to 60% of neodymium and praseodymium, and we're getting 78 to 79% and locally up to 90%. We're also seeing the heavies, terbium and dysprosium, these high value ones, we're getting about just under 50% of that out. Maximums are up around the 60s. But we're doing all this with around 37 kilos per tonne of acid consumption, and some as low as 22. We think those maximums and minimums that you're seeing there are probably what we can achieve when we do optimised leaching, because we haven't optimised this system yet. These are just first pass trials. We're also, so we're doing all this with, again, low ambient temperature acids. We're also seeing that there's the aluminium and ions release is very low, and these are impurities that you've got to extract out of your rare earth liquors. The average, also the uranium and thorium are very low, 20 grams of thorium and 1 gram of uranium in the liquor, which is just unheard of for these sort of leach systems. So all the data's out there in the public domain. You can see what it all adds up to. This is the boundary fence east area, was where we're getting some of the better results. There we go. We're also seeing, as I said, the leach results, and you can see from that top line in red, it's a flat line. So what we're seeing in the oxidised and the fresh, as you go down the hole, it really isn't changing much at all. The thing that, and this is probably where you want to start to pay attention, the thing that makes, this is probably the most important thing, is that after we did all this stuff, it's really showed that we have got a very simple processing options, potentially involving heap leach. But the data also showed that we can increase the revenue, in other words, to increase the rare earth extraction and reduce the processing cost, that is the acid consumption, by doing some really simple tricks. And one of them is just increasing the particle size. We went from 1 to 3 millimeters and we got more rare earths out and less acid consumption, which is completely odd when you think of base metals. Normally you've got to grind the hell out of the rock to liberate more of the base metals. But this is exactly the opposite. So when we started seeing this sort of stuff, we was going, holy hell, this is a heap leach situation. And then we also found that if we increase the resonance time, we increased from 48 hours to 96 hours with these bottle rolls. We got 20% more rare earths with no change to the aluminium and iron extraction or the acid consumption. So what those two factors combined tell us is that we can leave this, potentially lower the acid, or reduce the amount of acid we put on the rock, but also just leave it on it for a longer period of time and we can get it out. A typical heap leach bottle roll simulation goes for 14 to 28 days. We only did it for 2 days and 3 day trials. So we can really optimize this thing by just leaving it for longer with lower pH, and that'll have a huge cost advantage as well. So what we're really saying here is that Sabella's showing us that we've got significant processing advantages similar to the clay-hosted ones that we use low temperature acids, but we also don't have the potential for filtration problems and handling difficulties that come with clay ores. And that's a big thing. You can't heap leach clay ores because you can't stack them. Okay, I think we've sort of, all that table, a lot of info in there, but basically we're not a clay-hosted one. We're not a hard rock carbonatite. We're something different. We're something unique, and it's a world first, we think. You can have a look at all the rare earth numbers there when in our ASX release, but basically we're getting about 354 ppm or grams per tonne neodymium per tonne. Meteoric's getting 425, they're our closest ones. So, you know, they've got a market cap of around 400 million. I'll just go, and this is my last slide. So what we're doing next, we're doing the phase 2 work. We've drilled some core on the boundary fence east traverse, and we're doing size fraction leach tests and optimization work, which really should enable us, once we've done to get some really good handles on the cost and the exact acid consumption and size fraction that we can leach to, whether it's 5 or 10 mil. And then we're doing 800 by 400 metre drilling over the 12 by 3 kilometre granite, and that followed by resource definition drilling. That's going to be pretty cheap. We think we can fund it, 6,000 metres of drilling isn't that expensive with RC, but also we can get a lot of alternative funding sources from critical metal grants from the Queensland government and the federal government. So we're looking at that at the moment, and we've also got a lot of registered this project as an R&D, so we get about 45% of a lot of our metallurgical stuff back. So yeah, watch this space. I think it's an emerging sort of tier 1 asset in the rare earth space. Thank you.
Well done. Well done. Right. Now, the last time I introduced our next company onto stage, Noble Helium, they were getting ready to drill the first of 2 of their 4 prospects in Tanzania, and prospects or targets they thought were company making. Am I correct? Good, I'm just making sure I've got the right, I'm sure that was my recollection. So I know you've got some results in from 2, and from what I understand, you are a very happy man, so we look forward to hearing from you on that now. Shaun Scott, would you please make Noble Helium's Executive Chairman, Shaun Scott, very welcome this morning.
Thank you. I guess this is a little bit of a change of pace from everything else that we've been hearing, lots of metals and gold and lithiums and rare earths, but I'm going to talk to you a bit about helium and about Noble Helium and what we're doing, chasing what we think potentially is the world's largest green helium reserve in Tanzania. In a marketplace that I think is very exciting, and part of the reason I guess that a lot of people have been attracted to look for helium now. So why do we need helium? What's important about helium? Some of you may have seen some recent media from the medical industry getting very concerned about the sale of the US Federal Reserve and what impact that might have on helium availability for MRIs, which are a big user of helium. But it's also absolutely underpins global technology, fibre optic cables, and the big growth driver at the moment is it's an unsubstitutable import into the manufacture of semiconductors. And obviously semiconductors are in everything, your kids' toys, your phones, your cars, and obviously AI that's really taking off now is a big consumer as well. So it's growing quite quickly. At the moment it's about a US $5 billion wholesale market, predicted to grow to about 8 billion by 2030. So moving along pretty quickly. And of course the other big use is rocket launches, purging fuel systems, keeping tanks pressurised when they're flying, etc. And this is probably the thing that I think people are struggling to get their head around in respect of helium. If we do a comparison, and what this is comparing is the Tier 1 long-term wholesale price of helium at the moment, which is about 450 US an MCF, compared to Australian gas cap of $12 an MCF. And you can see that there's a massive difference. And fundamentally what that means is that we, as a helium producer, I need to produce about 1.7% of the production to get the same revenue line as I would from a gas project. So what that means is that the size of the resource that I need, the flows that I need to get, the production I need to produce, and therefore the costs that go with producing that are very, very small, but I can still have a significantly valuable and high revenue producing project. So keep that in mind. So North Rukwa is one of 4 project areas that we have in Tanzania. Tanzania is a unique geology for helium. So helium is produced through the radioactive decay of uraniums and thoriums in the crust. So you need crust of a certain age to have produced that inventory of helium, which we have in the Tanzanian craton. But then what's very special about Tanzania is that it's an active rifting system. And when I say active, over the last several hundred million years, we've seen a lot of rifting, upthrusting, heating, etc. And what that's done is that's released all of that helium inventory out into the surrounding rocks, and it's migrating, and obviously as a gas wants to find its way to the lowest point of pressure, so heading towards the surface. We've drilled our first 2 wells in Mbalali in Tanzania, and what we've seen so far is we encountered about a 10 to 15 metre free gas cap, quite close to surface. The way we were set up to drill, being our first well in a new basin, we weren't in a position to test that at that time. And across the two wells, significant, very high permeability and great porosity reservoirs, over a millidarcy in some of those reservoirs. 148 metres of net reservoir in Mbalali 1, 271 metres of net reservoir in Mbalali 2. So a significant and high quality reservoir that has the potential to flow very, very well. A helium concentration up to 2.46%. Which doesn't seem like much, but that is very, very material. There are a few places in the world where you have helium at that concentration. We also interestingly saw some significantly above atmospheric hydrogen in the first 350 metres of the second well as well, which obviously we want to go back and test. So I guess just to put that into context for you, where 2.46% sits when we look at the production of helium in other places around the world. And fundamentally, 95% of the world's helium is produced as a byproduct of natural gas. Produces about 30% of the world's helium. It's 0.05% of their gas stream. Clearly they produce a lot of gas through LNG, and that then concentrates the helium to allow it to be produced separately. The issue with that, though, of course, is that it's a fossil fuel. but secondly, that the helium production is regulated by the gas production, and when the gas production stops, the helium stops as well. Right at the moment, we're in the middle of helium shortage 4.0, primarily caused by issues going on within Russia. Initially, the Amur gas plant had an explosion, which stopped their gas production and hence their helium production. And then, of course, the issues going on with the Ukraine at the moment mean that no helium's being exported out of Russia. And I think what else that's done is that it's opened the eyes of a lot of the mid-tier guys, the big industrial gas producers, that they really need some geopolitical diversity and to try and get away from the fossil fuel connection, hence where we come into the picture. So what's next for us? We just got our lab results back, which, from our perspective, were very exciting. As I say, the 2.46%, we're able to increase our reservoir size, and obviously the hydrogen shows as well. We're working with the University of Queensland around modelling all of that data to work out our plans to go forward, which include going back and drilling that gas cap and testing that. I think that's important, and potentially there's enough gas in that to underpin our initial project that we're working on. We're developing a small low-cost pilot to depressurise the helium-saturated waters and see what sort of flows that we're going to get out of that. And of course, these are just two wells in a huge basin that clearly is prolific helium-producing basin. We have a neighbour to the south, about 70 k's from us, Helium One, who are an AIM-listed company. They also drilled a couple of wells. They've seen very similar results to us, high helium contents. As they depressurised their well, they had helium exolving from the water and flowing to surface as well. So it just tells you that this is a massive and prolific and unique helium producing system. And of course, we continue our discussions with potential off-takers around what we all really want to see out of this is turning it into money. A lot of people are asking about the water, and I guess when we think of gas and water, not necessarily the combination that we want to see, but obviously helium is quite different, and we can't think about it in a conventional gas way, primarily because it's extremely rare, obviously extremely valuable and massively in demand, as I showed you on the earlier table. So with less than 2% of the production, we can still get the same revenue line. And we have seen in multiple tests that we've done on site that mechanically it all works. So as soon as we start to depressurise that water, the helium flows out of it very quickly. Helium One to our south saw exactly the same thing. So we don't think that there's any mechanical issues with that. And the water appears to be, fundamentally low saturation gas resource. So we're working on this small low-cost pilot to go and test our theories on that, as I say, working with UQ as well. And fundamentally, it's going to be a function of a number of things. One, helium content, which we know, how quickly it flows, but probably most importantly is what's our recoveries going to be per cost of well. So if we can come up, this is application of my background, CSG technology around some dewatering to depressurise, and we think we can do this in a very simple, low-cost way. Which, given the revenue line that we've got, means that the payback on those wells will be very quick. And what it also means is that water's the fundamental pathway for helium through this whole basin, again, as seen by us in Helium One. So if we can prove this, or once we've proved this and get this a model that's working in Volatile, that then opens up the whole basin for us. We're talking about nearly 2,000 square kilometres, which is going to be full of helium-saturated waters, low saturation reservoirs, and I'm sure there are, in some of the deeper sections, when we come back and get an opportunity to test that, some free gas that's trapped there as well. As I say, we've got a significant amount of interest from potential off-takers, and we've been working with them. We've mapped out a path in terms of what we need to do over the next 6 months or so, and what they're going to do. From a CapEx perspective, they're very keen to fund the cost of any of the downstream equipment that we need. So for separating the gas from the helium from the nitrogen, which is the main other gas that we've got, and funding that for us, and then we'll just repay that back as we sell them the gas. Basically, they'll offtake from the plant on site, and then it'll be their responsibility to truck that up to the port and off from there. National power grid runs through our block, obviously access to water, labour, all the things that we need. And even though it is a relatively remote part of the world down where we are in Africa, that actually brings with it a number of benefits in the sense that a very welcoming community, excited to have some economic activity that's going to help them, employment, and the government of Tanzania very supportive. The way the regime works, it's once we move from exploration to development, it's a 16% free carried interest, so they become your joint venture partner. And I really like that model in the sense that we're aligned. If we don't make any money out of the project, they don't make any money, so they're incentivised to make it work. Just finally, we over quite a period of time, we've been working with the two foremost helium experts in the world, John Gluius and Chris Valentine. Those guys have actually developed a helium atlas for us, which has looked at all of the information they've gathered over a long period of time to pinpoint places in the world where helium would be prospective. Obviously Tanzania was on the top of the list, and that's why we started there, but we continue to work with the atlas and think about other areas that might be worth pursuing. Finally, we have a great team of people involved. Obviously still a small venture, but Justin has a huge amount of experience in Africa and in the East African Rift System where we're working, and leveraging that experience with the work that we're doing now. Alf Garnett, who's just retired as the head of the University of Queensland Natural Gas Research Centre, ex-Shell and Schlumberger executive, a huge amount of experience that, and now that he's retired, he's got plenty more time to help us as well, which is great. Eddie's on the financial side for us, based in Melbourne. Greg Columbus is, some of you may know from some of his other Warrego and other businesses that he's been involved with, but his expertise, particularly as we negotiate with offtake parties on the facility side of things, is going to be very helpful. And Kent Masters, who's the president and CEO of Albemarle, has been a long-term anchor investor in the business, has a lot of experience in Africa and with helium, and is quite excited about where we're heading and what we're doing. So, in summary, I think we're in the right market. Demand for helium is just going through the roof, and particularly green helium, and diversifying geopolitically away from some of the more difficult areas in the world. We think we've got a world-class set of assets here, and we've certainly demonstrated, not just us, but what the results from Helium-1, that this is a prolific and unique helium-producing system, and commercialisation is there, it's in view. That's all I have to say.
I thought you'd be more excited at the end of that, because it's very exciting news. Yeah, like just excited on the inside.
Absolutely, yeah, well.
I'm just playing with you now, aren't I? Get off the stage. I know you're excited. All right, now, I've got 2 seconds before we go to our next presenter. So just a reminder, at stand number 44, which is Hagstrom Drilling, who are sponsoring our Wi-Fi connections for the conference. If you'd like a new pair of R.M. Williams boots, you're in need of them. They've actually got a prize at their booth, and it's a $650 voucher to R.M. Williams. So if you go and see them and enter into that little competition, who knows, you may be even more well-heeled by the end of the conference. That's saying that you won't find yourself a 10-bagger. So who knows what's possible? And this man here is all about giving people good advice. Is that not correct, young Timothy?
Yes, hopefully.
All right, so Tim...
You can be the judge afterwards, though.
Okay. Tim is the Relationships Manager for Juniors at the ANZ Bank, and he's going to wrap up this first session this morning. So the title of his presentation, got a nice blue wash of lights in keeping with the ANZ, is A Volatile 2024, The Impacts for Explorers. So please make him very welcome.
Well, thank you, Chrissy, and good morning, everyone. It's a great privilege for ANZ to be here at RIU 2024. I've been asked so many times already, what is a bank doing at an Explorers Conference? And there's a simple answer to that. ANZ wants to journey with all of our mining clients from cradle to grave, if I can use that analogy. And so what that means is not only do we have a team of project finance specialists that look after our producers, but we also have a dedicated team of bankers that look after our explorers. And as you can probably tell from my title, that's where I fit in. My job is to look after our junior resources business here in WA. So if I haven't met you before, please come past our booth at number 55, and it would be great to connect. Now, as Chrissy has already said, I've entitled my presentation this morning, A Volatile 2024, The Impacts for Explorers. If I was going to use one word that sums up ANZ's expectations on the year ahead, it would be this: volatile. And so today I want to look at why that is, but more importantly, what the average explorer here today can do in response to this. And then I'll finish by touching on that age-old question, what is ANZ's current project finance appetite? Now, as we get started, here's an interesting fact for you. In 2024, about half the world's population is scheduled to go to the polls. That's one of the catalysts for all of this volatility that we're expecting. We've got elections later this year in countries like Russia, India, the UK, and the European Union. I'm not sure if you noticed, but just today, Indonesia is going to the polls. And then, of course, we've got the big one later this year between these guys, Donald Trump and Joe Biden. And the $64 million question is this: what will a second Trump presidency look like if he wins? And in particular, what will a second Trump presidency mean for this, the Inflation Reduction Act or the IRA? And I know that the IRA is important for many of you in this room because, among other things, it incentivises electric vehicle manufacturing and it opens many doors for our critical mineral sector here in WA. Now, one interesting thing I learnt about the IRA recently was that if you look at the green energy investment coming out of it, about 2/3 of that investment is occurring in Republican rather than Democrat congressional districts in the US. So in other words, you could mount an argument that Republicans rather than Democrats are currently benefiting the most from the IRA. And so it gives you a sense of the political conundrum that Trump will face if he comes to office. Does he unwind this piece of legislation and in doing so sideline a large part of his electorate? Or does he kind of tinker around the edges and make some cosmetic changes? It'll be interesting to see what he ends up doing. Now, there's another reason why we're seeing a lot of volatility in the world at the moment, and that's, of course, the conflicts that are ongoing as we speak. The conflict between Russia and Ukraine is now nearly 2 years old. Can you believe it? And it's become a very messy and complex war. And there's a whole range of unknowns here. For example, if Donald Trump wins later this year, he may very well pull back at least some of the US's support for Ukraine. And so put yourself in the shoes of Vladimir Putin. Have you got any incentive to negotiate a settlement when the war might get easier for you later this year? That's one of many examples of the unknowns at play, but it's difficult to see a clear path on how that war is going to end, at least in the short term. And then more recently, we've also had a range of flashpoints across the Middle East, in Gaza, in northern Israel, and more recently in the Red Sea. And touch wood, thankfully, we haven't seen any significant disruption to oil supply yet, other than potentially some shipping cost increases and some transit delays. But it's fair to say the situation is still volatile. There remains a risk that these things could escalate further and cause more widespread disruption. Now, I'm preaching to the choir here, but one of the other spaces that we've seen volatility at the moment is in the supply and demand of lithium and nickel. And so I just want to touch on those briefly. For lithium, we've seen a sharp fall in the lithium price in 2023. But one of the other challenges in the lithium market at the moment is too much supply. To give you a sense of this, lithium supply has nearly doubled in the last couple of years. And this year, ANZ is forecasting that production of lithium will increase by 40%, but demand will only increase by 25%. And so whilst lithium still remains long-term in demand as part of the decarbonisation journey, in the short term at least, we're seeing producers whacked with this double whammy of profit margins coming down in a market that's already oversupplied. And so we may unfortunately see further lithium projects being deferred or existing projects curtailed. Now for nickel, it's a similar story, but a slightly different angle. Like lithium, we've seen a significant increase in the production of nickel, especially in Asia. I'm sure we've seen the news about Indonesia's lithium production. That's increased 30% since 2021, and it's expected to grow another 8% this calendar year. But there's another angle to this story, and the fact is that our Aussie producers have a competitive disadvantage because we have much higher labour and environmental standards for our nickel production. But based on how the market works, our producers receive no cost advantage for our higher standards. And I've heard some discussion about government jumping in and providing some short-term relief, or potentially even some reforms on the London Metals Exchange. But for the moment at least, ANZ doesn't see any significant upside in the nickel price this year. Now, we've spoken about a few of the reasons why 2024 is likely to be volatile, but perhaps this is the most well-known reason and the most well-reported: interest rates and inflation. I'm sure we've all seen how inflation is reducing around the world, in countries like Australia and the US in particular. And so this has caused the market to form a very strong view that central banks will start to reduce rates later this year. But the exact timing of that, and exactly how much central banks will move, well, that's very much a matter that's still up for debate. But let's assume for a moment that rates do come down. There's obviously going to be some winners in this, right? For those of us with a mortgage, this is great news. Our loan payments will come down, our inflation will reduce our expenses, and obviously a tax cut in July should go a long way to providing cost of living relief. And these lower interest rates should also provide a bit of a tailwind for commodity markets. Generally, lower interest rates provide a much more positive backdrop for the market. And so with improved sentiment and the weaker expected US dollar, we should expect to see a benefit to commodity prices in general. But not everyone's going to be a winner, unfortunately. And I think what the general public often forget is that there's more people than just mortgage holders and commodity traders in the economy. For people with cash balances, like the average junior explorer here this week, unfortunately, interest rates coming down is not so good news, because it means the interest income that you can rely on from your bank deposits is also going to reduce. And so as that occurs, it's going to become more important than ever to proactively manage your cash balances. In other words, to spread your cash around between a variety of high interest savings accounts and fixed rate term deposits. And if you have overseas assets, which many junior explorers this week do, don't forget about your foreign currency as well. Things like high interest accounts and fixed term deposits are available in foreign currency too. Ultimately, what you want to do is make sure you're striking that tricky balance between maximising your interest and preserving your liquidity, not just on your Aussie dollars, but on all your funds as well. Now, there's going to be one interesting story that I think is going to be particularly fascinating this year, and that's the impact on all of what we've spoken about on the gold price. Remember where we are for a moment. We're in an environment of geopolitical volatility. We've got reducing interest rates, and so therefore cash deposits are becoming less attractive, and therefore the opportunity cost of holding gold is also coming down. And add on top of that the fact that over the last couple of years, central banks around the world have been prioritising investments in gold rather than in more volatile US-based assets. You can see where this is heading, right? Not surprisingly, at ANZ, we expect the gold price to benefit from all of this. In fact, the current view of our economics team is that we expect to see the gold price average above $2,000 an ounce over the course of this year. So it will be interesting to see what plays out. Now, as I finish this morning, I want to reflect on one of the most common questions I get asked as I go around talking to a range of junior explorers, especially those of you that are nearing production. The question I often get is, what is the bank's appetite for project finance? Now, the good news is ANZ still continues to have a strong lending appetite for the right projects. But you will probably counter that by rightfully asking me, well, what is the right project? Now, it is a bit of a how long is a piece of string question, but I want to touch on three things that our project finance team is looking at in the deals that come across their desk. These are three trends, if you like, in the project finance environment. Firstly, ESG. And I'm sure that's not a surprise to any of you. Environmental, social, and governance principles have always been important for lenders. But it's fair to say that we've seen that focus intensify in recent years. It's now the norm, rather than the exception, for the ESG credentials of a project to have to be independently verified by external consultants. And I don't see that trend abating anytime soon. And the second trend that our project finance team is seeing, and what we're looking for, is robust feasibility studies. For many projects, we're seeing an increase in the complexity of the production process. And so that comes with a heightened set of risks for all stakeholders, but especially for us as the lender. And so as best practice, we want to see projects with robust feasibility studies, including the relevant metallurgical testing. And most importantly, we want to see that done before the FID phase, before companies commit to going ahead. In fact, at ANZ, we have some in-house technical capability, and hopefully that can be and is of help to many of our juniors who are proceeding and coming close to production. So if you'd like to have a chat about your project specifically, please come to our booth. And the third example of what our project finance team is seeing at the moment and what we're looking for is liquidity and financial flexibility. And this ties into so much of what I said before. We're seeing many miners being pushed up the cost curve, and so we're seeing many mining operations put under severe stress when prices are deflated for long periods. And so we're looking to fund projects where there's fat in the game. We're looking to fund projects where there's capacity to meet additional cost overruns during construction. Or at the very least, we're looking for projects where we can put in place some structural enhancements that can reduce the cost risk. Things like hedging, or projects that are lowly geared or have a lower cost base to begin with. Now, as well as myself, in our junior resources team, my project finance colleagues are here with us all week. So if you have any specific project finance questions, no matter what part of the journey you're on, please come and have a chat. Well, my time is almost up, and I'm sure Chrissy will be getting me off here very quickly. But in conclusion, 2024 is likely to be a year of volatility and uncertainty. There's going to be many events that will be interesting to watch and fascinating to see how they play out. But in the meantime, there are simple and practical things that any miner can do, whether you're a junior, whether you're in production or somewhere in between. There's something we can all do in response to what this year might bring. I hope you've all got some food for thought from this presentation, but most importantly, I hope there's something that you can take away and apply in your own business or professional roles. So Chrissy, thanks again for the opportunity, and I'll hand back to you.
Thank you very much, Tim Robertson. A very good use of our time this morning. That's a great talk. Thank you.
Thank you.
I have suggested to Tim when you go and see him at his booth that he gets blue chocolates, little blue lint chocolates, and he has demurred on that. But I think we should put the pressure on him. We can change it little by little. Thank you. That was a really informative talk. So I do hope you got a lot out of it. You're all buggering off out the back of the room as we speak. The sausage rolls